I'm Mark Gagan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. I really enjoyed today's interview because it outlines what is quite an original proposition in a very competitive marketplace. Jonathan Tritton is the Managing Director of Burns & Wilcox Global Solutions, which is the London and international wholesale broking arm of the US-headquartered Kaufman Group. The group has been formed via the coming together of the Chesterfield and Lochain Patrick broking businesses. So far, so familiar you might say. A US-led broking group with London operations is hardly a big deal. But Jonathan is a recent joiner and the pitch he makes for his new employer is compelling. As the insurance value chain becomes more technologically advanced and much more efficient at allocating the right risks to the right distribution channels and the right forms of underwriting capital, despite the headwinds of the softening market, Jonathan is very optimistic about the growth prospects for his business unit. And with a combination of sufficient scale and resources to be in the game and an enormous amount of room to grow, Jonathan's optimism has an authentic ring to it. In this podcast, specific growth plans, the digitisation and facilitisation of the market, and Jonathan's ambitions for a Lloyd's syndicate, as well as his thoughts on AI, all get a full airing. Jonathan has been on the podcast before and is a very relaxed, eloquent and energetic interviewee. So this is an episode that will fly by. Enjoy the podcast. Jonathan, welcome back to the Voice of Insurance.
Thanks, Mark. It's great to be back. 150th episode last time. So yeah, it's great to catch up again.
Yeah, we're pushing 300 now, so yes. And shall I call you Jonathan?
Why don't you call me JT? That's how I'm normally known. So,
okay,
yeah.
Well, we've met a few times now, so I'm invited to call you JT. I shall. For anybody who's out there listening, who doesn't know you already, who didn't listen to episode number 150, I mean, shame on you. Why don't you introduce yourself briefly and run us through your insurance career to date, just as a kind of warm-up?
Yeah, so I'm an insurance son, got thrown straight into D&O, which was a great class, particularly US public D&O.
When was that?
So that was early 2000s.
So yeah, a very interesting time. And then with Sarbanes-Oxley, a whole load of things going on.
Exactly. So lots of companies I wish I invested in at the time, the Nvidias, the Apples and various others. And what I loved about that class was the fact that the insurance buyers, funnily enough, they might have been spending more on other lines of business, but the C-suite were quite interested about their D&O. So a lot of interaction. It was ensuring the people as well, which I loved.
Yeah, you really get the buy-in, don't you? Because yes, this is between them and losing all their assets and having someone coming and wanting their house.
Exactly. Personal protection. So they were very engaged. So there was lots of really good exposure to them at a particularly exciting time in the market.
So always on the broking side?
Yes, always on the broking side. So started off at a firm called Besso, which is now sort of rolled up into Ardonna. So did a good 6 years there. Great grounding. Then moved over to Marsh. That was a other end of the spectrum in many ways, but fantastic time at Marsh. So I did 9 years there. Focused in the latter years, started off focusing on D&O, latter years branched out into more lines of business, but particularly focused on the Marsh & McLennan agency side of things in the last years there. That was going very well. And then I got approached by a company known as Beach back in the day, Beach & Associates, that had just been bought by Acrisure. So yeah, that was a great opportunity to go in there with a couple of others as the founding management team to set up their London wholesale side. So
and now you're here.
And now I'm here, 4 months in. So I did 6 years or so at Acrisure. And again, that was going very well. It was a great stepping stone in my career and saw all the fantastic things that were going on here. And so jumped into lead what has now recently been rebranded just before I joined Burns & Wilcox Global Solutions.
Yes, no, to bring me up to date, tell us all about Burns & Wilcox Global Solutions. If I was someone unfamiliar with all of that, maybe I might have been familiar with some of the constituent parts of that. It's not a new brand necessarily, but it's bringing together lots of different bits, particularly in the London market. If I was that person who said, tell us all about it, what is it specifically, and how does it fit in with the wider group, the Kaufman Group, for example?
Yeah, well, I'll start with the Kaufman Group just to set the scene. So family-owned, headquartered in Detroit, Michigan, 60, 70 or so offices worldwide. 3 main brands within them. So you've got Burns & Wilcox, which is the broking and binding brand. You've got RB Jones, which is the MGA brand, and then Attain, which is the AM Best A rated insurer over in the States. So yeah, in terms of Burns and Wilcox, there are a large presence in the States, one of the largest wholesale brokers, and they're also in Canada and Dubai. But I've come in to run the London operation. So we've got 5 or so people in Amsterdam, but there's 85 or so of us here. And that was an amalgamation. So the family have owned 2 legacy brokers who operated quite separately for 10 or 12 years. So brought those together, rebranded them as Burns and Wilcox, and added the global solutions part. And yeah, leading that going forward.
And those 2 were Chesterfield?
Yes, Chesterfield, which was more non-marine focused, and Lochain Patrick, which is marine focused, mainly hull.
And what sort of scale is the global solutions business?
So, as I said, we've got approximately just under 100 people in total. We've grown significantly. We're a privately traded company, so
Look,
family
you don't have to tell me anything.
Big growth aspirations as well there. So yeah, looking to grow, as is everyone, but yeah, a particular focus there.
And where you fit in strategically, obviously being a very big US parent company, parent broker, is it a lot of what you do servicing that parent?
Yeah, so they are our biggest client, but they're not our only client. It's about a third of our business comes from other members of the group, and that could be doing things for our insurer, placing reinsurance behind the insurance company. It could be with our Burns and Wilcox colleagues. It could be with our RB Jones colleagues. But we've got more third-party clients. And actually, that's a really nice balance.
So 1/3 in-house and 2/3
Yeah, 1/3 in-house and about 2/3 external.
Yes, it's quite nice to have a third that's a kind of solid banker pillar.
Yeah, but we have to sort of fight to get that and earn it off our own back. It isn't dropped in our lap. And the great thing is that we've been seeing growth from both sides, and it gives us that diversification and, yeah, the ability to work closely with colleagues and third parties.
And I suppose, are you often the place that where the parent group will come and ask you about new products, or London being a place where new products are often manufactured? Are you seen in that sense as being a place, that lab where you can go and cook up some of the new products to cover some of the new risks? As we know, I've done podcasts on carbon credits or whatever, things that haven't been done anywhere else yet. Is that partly the way you're viewed strategically?
Yes, we are, but that's both by our colleagues who are sending us business and by our clients. And London's got such a fantastic reputation and history of both manufacturing products, but also being innovative with how those products are distributed. So yeah, we've earned the right with both our in-house clients and our third-party clients to go out there and manufacture new things and new ways of doing things as well, and pushing the boundaries and adding value.
And what sort of geographical spread? The whole world?
Yes, the whole world. We've got a strong bent towards North America, particularly the US. Unsurprisingly, given the amount of premium that comes from there, but also our parent company being based there. But on the hull side, we've got a lot of European business, particularly Greek, and everything from things in South Africa to Australia and all across the globe.
So classic wholesale.
Exactly. Classic wholesale, all sorts of things coming in from all corners of the world.
Yeah, the unifying thing is that the things that are difficult to insure in those local markets, or that those are products that don't really exist.
Exactly.
In any scale.
Exactly.
When I'm walking down Lime Street and I bump into someone, for some reason we might start chatting about Burns and Wilcox, what would you like their perception to be? So, these people, in the way that if you said Lochain Patrick back in the day, you said, well, they're a great marine broker, but I don't know if they do aviation but anyway, the classic sort of marine things that move.
Yeah.
And Chesterfield, so they're a non-marine broker, got small, but got some good specialisms. How would you like to be perceived as Burns and Wilcox Global Solutions? What would you like them to say?
Yeah, so I like to sort of encapsulate it that we're a really unique home. When you look at the dynamics of the London marketplace and you look at particularly the other brokers in that space, we're relatively unique in the fact we're family owned. So a lot of the differences about ownership and things like that we've been seeing make a big difference to how brokers are run and perceived. But I'd say we're really focusing on our core at the moment. And that would be, if I was to pick out 2 particular areas that we're strong in, but we really want to strengthen and double down in, and that we're known for, would be on the delegated side. Very strong in terms of some contracts that have been going for decades and decades, and fantastic relationships with the markets off the back of those years. And then also the hull side as well. Again, there's some fantastic long-term clients there. So we're really looking to double down there. And I think we're well known in that space. So we really want to push on there. whilst also being opportunistic to go into other spaces. And I'd like to think that we're quite innovative and fast moving. Maybe not historically, we've been steady and strong, but now, especially in the last year or so, with new management coming in, a new generation of the family taking over the day-to-day running, we're really pushing to innovate and being right up front.
So it looks like, yes, you want to be expanding, you want to be hiring teams in all sorts of things that you haven't done before or adjacent to where you already are strong. So do you want to deepen those two areas where you are strong? And then where are you looking to expand?
So the other logical adjacent lines, I'd say as well, is that we've got the ability, and go back to that private ownership, we've got the ability to not be quite as short-term focused. Yeah. It's not to say that we want to stand still or not move quickly, but we can look to make those investments for the medium and longer term. So it's really rounding out the whole, the adjacent lines from those. So it might be open market property, which we have some people, but you can grow into that, which is adjacent to the North American delegated. So cargo in the marine space that we've got a little bit, but we could really go into that as well as pushing on the hull. So we're being quite thoughtful about it. We're very much open for business and looking to hire the right people, but really focusing on the core and the adjacent lines.
That sounds quite nice. Yes, it's not like some private equity owned businesses, you can sort of almost hear the clock is ticking in the room. The sort of meter is running all the time. You feel like we know by year 2, we have to do this. By year 3, we have to have done that. Otherwise, there's going to be trouble.
Yeah.
You've got that imperative to growth, but obviously it doesn't have to be for growth's sake, and it better be kind of sustainable growth that makes tons of sense and it'll still be here in 30 years' time type growth.
Exactly. And the family are very much in this for the long term. They're the third generation now running it day to day. And you see them bringing their children in. It's not something that they're, looking to move on. But yeah, and I think that ticking clock, as you say, unsurprisingly, it pushes behavior in a certain way. And I think we can be far more thoughtful about that and strategic and not just growth for growth's sake. But we've still got the energy and the drive to want to do that. So,
and of course, you can still move, and you can move quickly if you need to.
Exactly. And that's one thing I've been so heartened to hear, because obviously I haven't been here for very long and did a lot of due diligence and heard lots of good things. But now I'm here, I'm even more excited than I was on the outside. But I've seen that nimbleness.
Well, this sort of say, this isn't in the budget, but can we do this?
Exactly. And you do a business case and the next day you can go off and do it. So, rather than being a massive super tanker where you've got to go through layers and layers of committees. So that nimbleness is a fantastic tool to have.
Market's getting more competitive, obviously. We've had a good run, and I'd just say it's been good for everybody, but not necessarily so good for the clients. So clients got the boot back on their foot now. How are you going to differentiate yourself now that the market's getting more competitive? And obviously, organic growth, it's not just nailed on anymore.
No, and you just have to see the figures coming through. It's harder to do that. I've always been a big believer, and it served me pretty well, is that we as brokers, as intermediaries, have to add value. And that is so key. And you've got the product side of things, you've got the platform side of things and how the business is placed, and also the people side, which we all love this industry because of that. So to really get that singing, we're investing a lot in that to help that business flow. We are seeing as much as ever coming over to London. London is and should be on everyone's marketing list. I don't think that the local brokers, in a lot of spaces, obviously there's certain niches, but can afford to leave London off, because on the whole, London has been stepping up, filling the void, being innovative and going forward. So the way that we can help that flow, and we've been seeing growth off the back of it, which is a bit harder as the broker that mainly takes commission rather than fee, with certain areas softening. But yeah, we've seen that flow keeping up, which
That's
is
good. So the London market's still out there, it's competitive and shouldn't be ignored.
Yeah.
And good to hear that submission flows, because the first sort of canary in the coal mine can be when you see that submission flows are actually tailing off and you're thinking, well, where is this business going? If it's not coming here, it must be going somewhere else. It's being retained locally. The local market's regained its appetite and some of its capacity. And that's the hardest thing. If you don't actually get to see it, you can't write it.
Exactly. And you just got to look at the dynamic in the US with admitted and non-admitted. And I think that traditionally a lot of retailers, through their experiences, they just always defaulted more to the admitted lines. But then with the harder market came them exploring more of the non-admitted solutions and realizing actually those are more innovative. They are more nimble, there is more flexibility on the price there. So now they're saying, okay, some of the business might be repatriating either to the States or maybe slightly into the admitted market. But we haven't seen that flow back because the non-admitted market, without having to file rates, without having to file forms, you've got that innovative flexibility there, which clients ultimately like and brokers like, providing options to their clients.
Yeah, exactly. And I suppose it's good news in that sense that they came because they had to, but they stayed because they could get better service, more bespoke products, and they get what they really needed.
Exactly. And that's where it's incumbent, again, going back to the adding value, for us to keep on providing that in whatever shape or form it takes to keep ourselves as relevant as we have been.
And I suppose once they're already in the excess and surplus lines market, then they're already kind of in the London market, even if they don't realise that they are.
Exactly.
At least with something where the London market is already playing, whether they know it or not necessarily. It could be obviously through cover holder relationships or other things. I suppose perhaps the other reason why people come is because technology's got so much smoother, that it's quicker, it's less clunky. You can get back to people quicker, you can respond quicker. One of the things that's helping with that, certainly at peer group brokers, has been the facilitization of certain percentage of books. I'm not sure if you've done that yet, or that's why I want to ask you. Let's say probably, most of the top 10 brokers in London have done it or are about to do it. Is that something that would be on your shopping list?
It is, although I'd argue that because we've got an insurer within the group, that we've sort of been doing that behind the scenes, different sort of setup to most. So we've certainly been looking where we can bring that capacity to bear with certain different products and offerings. But yes, it is certainly in the sights. Our business is more skewed towards delegated than open market. So it's a slightly different...
Yeah, so you're not going to be able to do a facility of delegated, are you?
Well, that's where we're looking at it. Well, that's where we're looking at it. We've got 50 plus different binders just with our North American colleagues alone. They've all grown up. Some are 2 years old, some are 22 years old, and they've all come up and they've got different markets in different geographies.
It's never an alien. Yes, I mean, in the hedge fund world, there were funds of funds. In fact, an earlier episode close in the schedule with you is carbon underwriting. They've got a whole account.
Yeah.
So again, why not? Why not a fund of funds of really nicely diversified book of business? I mean, obviously, and really not very volatile, and even less volatile if you pull it all together.
Exactly. You got that spread. So that's exactly
we're talking ourselves into this.
Yeah. Well, no. We're already fully involved. But you look at that portfolio and it runs really well. We had a lot of our US exec over last week, and we were talking with the leadership of a number of Lloyd's syndicates and company markets, and they said, you have done consistently a fantastic job and really good stewards of underwriting capital. And so we look at that and go, actually, it's quite well spread. Yes, it is a bit more catty in certain areas, but ways that we can look at that portfolio and really do a bit more with fewer, deeper relationships. So looking at people providing capacity across a whole book, which again is sort of facilitization, but on a broader portfolio basis.
Doesn't that just become a feather in your cap to say, well, because by dint of using us as your broker, you will have access to this because we're effectively almost pre-underwriting this on behalf of the whole market. And so you'll have a bedrock of very solid, very happy capacity. And I suppose people are likely to beat a path to your door because if you have that and other people don't have that, that gives you a comparative advantage.
Exactly. And we've already got more markets coming to us than we can accommodate. But I think we can be smarter with the way we place that and give them broader, less volatile on the macro basis. And yeah, it just sets us up far better and it makes complete sense. There's also a lot more demand coming from the market to look at those broader deals, sometimes across geographies, across different lines.
I was reading something on your website in preparation for this, and there was a sort of Q&A with you, and you mentioned about ambitions for a Lloyd's syndicate.
Yes.
So again, so that sounds like this would fit in nicely, wouldn't it?
Exactly. And so, as I said, we've already got an AM Best A-rated insurance company in the States that's admitted in all the states, both admitted and non-admitted. So we're already used to that. There's a few others in the London market, that a very small few that have a Lloyd's syndicate. So it's early days and it's a different part of the group to me. But you think back again about that portfolio and having some skin in the game and that alignment.
And that's the idea, it to be, yes, something that might participate in that whole account effect of your delegated book, for example.
Exactly. So that's a natural extension, and how brokers particularly are looking at the value chain and seeing where we can control more of the assets along the chain. And you're never going to do all of it. And it's good to have some diversification, but also the more alignment and transparency you can have along that chain, it's so important. So having a syndicate, so we've got some fantastic people who are here or who are coming in who've got experience in that space. Paul Greensmith, who runs International, who I report up into, he was the CEO of the largest managing agency at the time, and a few other people around who've had real experience. So it's early days, we're exploring it, but it would be a natural extension for what we're doing and the opportunity it brings to clients.
And what about in-house MGAs? Obviously, within the wider group, you've got MGAs, but do you have any in London?
Yes, we do. So RB Jones, they are here in London. They are also, and out into the regions. We've got quite a big UK regional book. They're in the US as well, and recently just got regulatory approval in the DIFC. So a colleague of mine, Ed Kelly, came in similar time as me. So he's come to run that MGA arm and is out there standing up a number of new cells within there. So I think they're sort of a crucial part of a larger intermediaries toolkit. But equally, there's a lot of good third-party MGAs out there as well, who back in the past, MGAs were seen as a bit of a dumping ground. But to survive and to thrive, these MGAs have had to be really, really sophisticated and focused. Otherwise, they just won't have the capacity out there. So a big part of the overall distribution side.
What's your view of that, the way that the market's changed over the last 20 years, particularly? I'm sure when we were just starting, MGAs had been through a bit of a rough patch at different times. And also, there was more friction, just with everything. Every time you put another pair of hands in that chain, you added at least 10% to the cost, and you probably added at least another 1/4, probably being optimistic, delay to the information and the premium probably even being passed along the chain as well. What do you think is behind this boom? Do you think it's down to technology? What's really behind this change? And do you think it's a permanent change? And I think you're probably going to say yes. I'd like to hear your thinking on it.
I do think it's a permanent change. I think there's far more knowledge about all the constituent parts of the insurance chain as well. I think certainly a lot of the larger organizations were still very focused on, or they had different divisions who were very focused on their particular part of the chain. Now, that's happening, but in terms of when you're taking a more macro view of things, they weren't looking at the entirety of the chain, where the friction was, like you said. And naturally, when there's more people in that chain, there's a bit more friction. So I think that alignment, people are acutely aware of the alignment along the chain, and people knowing what and where they're adding value and how best to flow premium through that chain. And also knowing further down what feeds the chain. And we don't talk enough about the client at the front end of the chain. So almost making the chain sing as harmoniously as possible. So you've got that retail broker at the front end who's talking to the actual policyholder and is providing them with better things to solve their problems. So I think in general, people have been paying, yes, okay, they want more bites of the apple for obvious reasons and the economics that go behind that. But it's also to help things to flow through more. That is why there's such big focus. And I don't think it's going to go back to the old, more siloed world of the separate parts.
Obviously, the technological side of things, I think if you've been on top of that delegated book and being recognized as being really good at that, really adding value as a broker in that space, presumably you've had to invest in the kind of insurance company style analytics and technology platforms, that kind of thing. Presumably that's going to be a big part of the future as well. If you're going to join up a Lloyd's syndicate, capital in all sorts of different forms here and there, it seems like you might need a unifying platform so everyone can see what everyone else is doing.
Exactly. And that's key. You can have all these great things at arm's length, but if they're not all connected together, then they're frankly sort of worthless, and particularly for that end client. So we've invested a lot of time and money. So we've got a whole new broker platform and very much sort of tech-led for the future, ready to plug in at the front end, at the back end. So pretty rare. It's come in on time and on budget, which is practically unheard of. And that was something that was really key for us to invest in for lots of obvious reasons, but not least just to make sure everything is connected as possible. Overlaying that as well is, as you mentioned, the actuarial and analytics side. We've employed a new chief actuary relatively recently as well, and she's building out her team and doing a fantastic job with that. And so, to my mind, those two things in particular are sort of table stakes now, and it's crucial that we have those and we make the best use, but then overlaying it with the people aspect, because you can have all the best data, the best technology, the best actuarial reviews and analytics, but without the people and those relationships to then feed things through, you're not going to be there. So it's, to my mind, it's the best of sort of the human and machine to get the best out of what we've got for our end.
Yeah, because if you don't pick up the phone to that client once a month, then you probably should be. You know you should be. And then, of course, now if you've got really good analytics, you've got something to talk about.
Oh, yeah, exactly. Yeah. You can be hugely proactive. It's not a once a year job. It's continuous.
That thing you did last week, that's really interesting. Everyone wants you to do more of those.
Yeah, going, oh, we're not quite growing there. What's happening? Well, we can look into the real-time data and see it. If we tweak that, then more will flow through. Or, oh, there's an opportunity there that we've seen, and go to the underwriter and open things up or change a wording or whatever. So we can really then make really informed decisions because we've got this real-time feedback. And again, it goes back to that nimbleness and adding value. So we're not just there going, oh, we've renewed it for another year, we'll sit on our hands and twiddle our thumbs. It's that constant focus on how we can add value for the client.
And presumably that's a similar thing looking through to those capacity providers as well, that they get the same view.
Exactly. Yeah. So you're providing at both ends. And I think that people, particularly people in the brokers and maybe wholesale brokers, to really focus it in, can be a little bit defensive about what they're doing and what they've got. Big believer is, if you've got the data, then sharing it both ways up and down the chain, and having the confidence to do that and not feel that you're going to be disintermediated or whatever, because you know that you're adding value, then ultimately both parties, both the markets really appreciate that because they're getting insights they didn't get. And then also, you're being transparent towards the client and down to the retail broker.
If you're bringing profitable business and you're also helping that profitable business grow, why would anyone ever get rid of you?
Well, no, exactly, Mark. That's the thing. Well,
that's why you have brokers, because otherwise they'd have to hire a load of brokers of their own anyway, in which case that doesn't make much sense. They pay you commission for a good reason.
We've got to earn that, yeah.
Yeah, well, hopefully, if you pay a few points commission, you hopefully get more in value back, don't you?
Exactly.
If you didn't, you'd start questioning it. Right. What about AI? We're on the technology question. Where do you think you're getting the best out of it at the moment?
So we're definitely embracing it. You can't ignore it because it is so powerful. We're really focusing it on two areas. One is where you've got a lot of data and the ability for it to go in, summarize, analyze that saves countless hours. So we're very much focusing on that. And then it allows us to then neatly summarize that huge amounts of data again to sort of show that up and down the insurance value chain. And then also we're focusing it on the more menial, repetitive tasks. So there's things where it could be as basic as rekeying, but all sorts of things like that, which unfortunately our industry has been well known for in the past, is really trying to harness it to help that. And looking at things, and we might have perceptions of things for what we feel, but allowing AI to go into places and supplement things and pull things together to make more informed decisions and maybe counteract some certain perceptions on things that people might have felt anecdotally. So those are the two main areas that we're embracing it with, but still very much trying to keep that human aspect. And again, that blend of the human and the machine.
A little secret room where this agentic AI army is parallel placing everything, and you're testing them all.
Not quite yet, but we're always looking for ways that it can help us add value. So
good news, guys. You're all fired because this thing's way better than you.
I'm still here anyway. So yeah, for the moment anyway.
I mean, it's going to be a long way off. And
yes,
getting it to do broking.
Yeah.
Can't talk to anyone. So
well, no,
not
again,
very well.
Anyway. It's that people side of things, and you need that relationship as well. So it's going to be a great tool in the toolbox. And it is already a great tool in the toolbox, but it's how we're marrying it up and how we're focusing it is the key.
Well, at some point, again, I suppose it's all about things will flow down the channels that make the most sense for them to flow down. At some point in the future, if there's an agentic broking, agentic underwriting channel, then it'll just flow down there.
Yep.
It'll be some of the high volume, low premium stuff that you probably wouldn't make any sense to waste a human's time on, in which case you'd say, well, that's nice. I suppose that's probably where it's likely to start, isn't it, if it does start?
Yeah, and I think that's similar to sort of digital trading. And I think that's certainly got a huge place. But to your point, where it's going to be focused best is those higher volume, lower premium type that are more labor intensive.
I mean, we're all used to this as consumers in the motor insurance market. We know it's not human.
Yeah.
It's just put it in, see what you can get out.
Yeah.
And you generally don't get very far by talking to anybody because they'll just tell you whatever the machine tells them.
Yeah, but then it's going, right, where's that machine? What portfolio is that machine placing it into? So then you're taking a broader view of that type of higher volume, lower premium business and managing that around the edges. Now, the AI and the tech can help with the distribution into that, but that overall program portfolio, whatever you want to call it, still needs managing and analyzing, and there's the relationship behind there with the paper providers and the like. So yeah, it just frees people up to focus on that broader portfolio view, and also releases people to go out and look at new areas and
get more business.
Get more business in. Exactly.
I can't think of a time when there's always M&A going on in the broking world. It's just sometimes it seems maybe it's like, you wait for a London bus and then three come all at once. And sometimes it seems to be just the way it is with big broking deals. Particularly we've had lots in the US retail space. Obviously, that throws up lots of moving parts and different things start falling down and opportunities come, and sometimes doors get shut over here and then another one opens up over there. How's it affecting you guys at the moment? Because there's been a huge amount going on in the US retail space.
Yeah, it's a very exciting time, very dynamic time. And I think overall, there's more to come. I think that if you look at just the London independent broking world, so outside the public brokers, it's becoming harder and harder for the smaller brokers, even if they're appointed reps, to be of sufficient scale and whatever it might be, regulatory and things like that. So I think we're going to see a bit more of that.
It's always surprised me that everyone could countenance any more M&A within the London wholesale space. You think if there's one space in the world that's done, but it's never done, is it?
No, it's never done. And others are cropping up and starting. But I think what has changed more recently is particularly those retail brokers paying more attention about when they place business down the wholesale channels, and not just who they're placing that with, that first wholesaler in the chain after them, but then where that wholesaler places it. So it might be a US retailer placing it with a US wholesaler, but then hang on, if that wholesaler's then placing it with a competitor of the retailer, and that's traditionally been quite opaque.
Yes, 40 years ago, plenty of value chains had independent retailer, independent wholesaler, first level, and then independent London wholesaler, were all independent. So there's no strategic problem at all.
Yep.
And now probably someone is aligned with somebody along the chain, or probably all three are aligned.
Yeah.
And so you have to think about those alliances now.
Yeah, and you see, you go back to the MGA side, there's a lot of the broking groups that have MGAs within them, and one broking house will place something with an MGA that's owned by one of their competitors.
Well, if they do the best job, and ultimately
exactly,
it's a competitive market, and if the best terms are available for your client over there, you have to go.
Yeah, it's a far more interconnected world now. But what I would say about the wholesale space, and particularly in the US, is that we're hearing back, and we've seen this in terms of us being brought on, and by us, I mean our US colleagues, but us as well. So Burns and Wilcox in the States is sometimes being brought into those panels because there's an over-reliance on very few, very large wholesale brokers, who, by the way, do a great job in areas, but more and more of sort of feeling that maybe the pendulum sort of swung a little bit too far, and there's room for a few others that are...
Particularly if you've already got the scale, there's no question that you can handle it.
Exactly. And that's where we've had a lot of success, where we've got a particular strength in personal lines in the US, for example, and we're very well known for that. We've got a lot of those contracts that flow into London. And so that's where we're doubling down on that, where we can very much compete with the very biggest out there. So that's been a really interesting dynamic.
So it's more of an opportunity most of the time.
Yeah, without doubt. And we're also, when you talk about people and other brokers outside of the US, and particularly here in London, we're finding, and I've only been here for 4 months, but I've spent a lot of time on recruitment and obviously seeing how the pitch lands. And I was on the other side not too long ago and heard the pitch, but we're definitely getting a sense from the wholesale brokers, the individuals there, is that either being publicly owned, PE owned, gunning for an IPO, whatever that might be, is that that's quite a different company that is family owned, that is still innovative. You've got all the tools that you need, can look more long, medium term, is as a result, it's really compelling for people. And they see that a lot of those stresses and strains we don't suffer from, and we've got that nimbleness as well. So that's a really exciting thing for us because we are a pretty unique home in London. And we've also got the scale of the group around us and the foundation here in London to really grow and attract great people to grow with us.
Yeah, I was going to ask you what the pitch was, but I think I just got it.
I knew I had to get it in, so I got it in quickly.
No, but it's a kind of best of both worlds type pitch. You've got the scale. Obviously, you're in a hurry when you need to be, but you can be in a hurry because you're quite nimble. You can quickly ask the owner of the company whether that's okay, and they can say yes within 24 hours, and you're off. You don't have to talk to committee. But at the same time, you've got that scale. You have a certain amount of solidity. So it's not like a startup that started last week. It's third generation. So again, you've got a bit of everything.
Exactly. And that's where, it's debt free. We've got all those things at our disposal.
But in that sense, does it sound like more of a conservative pitch? Sort of, well, if you really want to maximize, what if you want equity or whatever, that kind of thing. That's not the kind of pitch that you can get in other shops, though, necessarily.
So there's others out there that are pushing that. But I think the gloss has slightly come off that because...
Well, equity is all very well, as long as the equity is worth something. Yeah.
Well, yeah, exactly. And how liquid is that equity is always a good question. Or what class share have you got? Because there's quite a few letters in the alphabet before. But we've got means and ways to really align people in a meaningful way.
So in terms of the sort of rewards they can get, they should say, well, they'll be good, right? Well, they'll be competitive.
Yeah, no, certainly. And as part of the pitch, I'd say we can and we have been competitive on that front, but also crucially giving people that platform, almost the safe space to go out there and be innovative and grow and be supportive.
Yeah, but less of the downside as well.
Exactly. And a lot of us have come and have arrived relatively recently, and we've been at big public companies, both on the broking and underwriting side. A number of us have also worked at the more nimble end. So we're drawing on quite a lot of experience about what works and what doesn't, and what motivates people and what doesn't. And that's one of the things that really attracted me to come and work here. And again, we're seeing it land with people that we're looking to get in now, that it's a really unique home at quite an exciting time for us. So yeah,
we're lucky people. Also, the London Masters report was just out. London's doing well and London's increasing its market share. So that's only a good thing. That's good for everybody.
Exactly. And by the way, and I love that report as well. And I always tell my non-insurance friends out there that over 30% of the city's GDP comes from the insurance industry. And I think the London Market Group and various other groups and brokers and underwriters and the like are doing a better job of doing that, but I think we can do even more. But it's a great story and we should really, really be shouting from the rooftops about it. And I think another part of that report, which I found really telling, was the age dynamics of where the market is looking like it's going. So we've got a big focus. While we love to get in and we really want to get experienced people in, we're also really investing in bringing in new starters into the industry. That could be the university graduates, but also school leavers as well. And having that pipeline of people coming in.
It's good if you marry those people to the people who've got 30 years experience, the young, ambitious one with all the energy and sort of bouncing around, but with a 30 plus career person to really explain how to do it and what not to do as well.
Yeah.
You can get a really nice combination.
And that's where we've got a fantastically collaborative culture, which helps that even more. So yeah, there are people who've been here for a little longer than others, but we're really encouraging them. And frankly, they're doing it already to really marry those, to work with everyone. And it might be just within the broking arm, it might be with our MGA colleagues, it might be with our colleagues overseas as well. So that's something that we're really focused on investing time, money and everything to get that pipeline of future talent into what is a fantastic industry.
From what I've heard, it's going to be a really interesting story. So I'm going to have to book in because it looks like you've got a lot of runway to grow as well. So I'll be checking in with you in the future.
Definitely, Mark. We'll have to try not to leave it 150 episodes next time.
No, it'll be less. I think it'll be less. I have to make a commitment for it to be less.
It would be great to come back. Always enjoy chatting. And we're in a really great spot at the moment. And I'm really excited. And I think the London market and the insurance industry as a whole is as well. And we're just looking forward to capitalising on it and carry on growing.
Thanks a lot. Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this programme. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. The Voice of Insurance podcast is produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.